Good evening, class, and welcome to our advanced taxation class for today. Today, we'll be talking about oil and gas taxation. Now, this is part 3. In part 1 and part 2, we talked a lot about the theoretical aspects of petroleum profit tax. Now, today, we will be discussing the calculation part. And so, while solving questions, we are going to be talking some of these things that we've discussed in the part 1 and part 2 while solving a question. And so, let's go straight to our board. The topic is oil and gas taxation. So that's the topic for discussion today. And our first question is May 2019, question number 1B. So we are doing ICANN past question. Okay, this is question May 2019, question 1B. So that's what we are solving for today. All right, so let's read the question. So how we'll read this question now, we will, of course, question number 1 is a 30-mark question, and we have 1A, which is 2 marks. This is just explain the accounting period of a petroleum exploration company. Of course, we know it's actual year basis. For a new company, it is from the date that you commence business to 31st of December of that same year. For a business that is ceasing, it is from January 1 of that year to the date in which the business ceased. But for an ongoing business, it's from January 1 to December 31st. And that goes, you've done that and you go to the next part. So the B part is having the remainder of the 28 marks. So here, this is 12 plus 12, 24, plus 6, 30. This 12 marks is somehow, it's not 12 mark. I think it's 10 marks. If this is 2 marks, then that means this is 10 marks. Because 6, 12, 18, 18 plus 12 is 30. So let's do it now. We are asked to look for chargeable profit, assessable profit, chargeable tax, total tax payable. All right, so this is a requirement. As the desk officer in charge of petroleum matters in the accounting firm, the principal partner has directed you to work on the file of Priceless Oil Limited. Specifically, you are to prepare and submit a report on the following computation. So that's where our focus, first of all, would be Priceless Oil Limited. So let's get our things working. Priceless Oil Limited. Okay, so you may want to do everything at once. You might say assessable profit to tax payable. You can say it assessable profit, chargeable profit and tax payable. So you can do that. Assessable profit and tax payable for year of assessment. We don't know that yet. We'll now read the question to find out. All right. It's a long question. Priceless Oil Limited commenced crude production in 2006. So this is the year it commenced. The company has provided the financial report in respect of its operation for the accounting year ended 31 December 2018. So you now know that for the year of assessment 2018. So that's what we know. So the next thing to do is to put your Naira sign, again. It is possible, okay, see, because they put 3 Naira sign, 3,000 sign here, we will join them and do it. Because these could be very much large figures. All right, so now we will need to start from income because all these are a lot of things. We'll start from income. So you will now say income from upstream activities. So what we are doing now is the income from upstream activities. We'll start with sale of crude oil, 190,000 barrels. So what will you do now? 190,000 barrels. So you say sale of crude oil. I know you are giving exports. Now, the thing is this, what should you use? Should you use this 2 million or be this 2,850,000,000, or should you calculate your own? Which should you do? You might be tempted to use this figure, but please don't use it for export. You can use it for local. But let's look at the additional information before we go into the main body. Posted price for crude oil exported average $52 per barrel at an exchange of 306 to $1. Okay, so this is for export. So we will now simply do export to the, just a moment. All right, so we'll use this additional importance than that thing. We have 190,000. So we'll come here, exports. We exported 190,000 barrels multiplied by how much is the posted price? The posted price is $52. $52. We multiply it by $52. Now, what is the exchange rate? 306 naira per dollar. That was when Nigeria was good. 306 naira per dollar. All right, let's calculate this. 190. Now, remember, it was 190,000, right? I decided not to put the thousand because of these three zeros that I put up here. If I put the whole thousand, I will still need to remove three zeros. So if I remove the three zeros now, because it's multiplication I'm doing, I will still, anything I get in my calculator is what I'll put there. So 190 multiplied by 52 multiplied by 306. What I have here is 3,023,280. So I'll come here, 3,023,280. Now this is higher than what we have here. This is higher than what we have here. So whenever you see anything inside the body here and the account here, always take the one in the additional information, whether it is higher or lower. The one is in the additional information is far more reliable. Now that's for exports. We don't see anything here. We don't see anything here for we don't see anything here for local sales. We don't see anything here for local sales. So what we'll do now, we come to local, we'll put the 653,700. Local 653,700. Okay, so we are done with this and this. Then we are also done with this. But they said included in other income is 38 million derived from transportation of crude oil to the refinery. Now, this transportation of crude oil to refinery is a downstream. It is downstream. So it means that this 38 million is not going to be included in the upstream activity. It's not going to be included in the upstream activity. So what you will now do is, because the next thing here is other income. Other income. We are going to 128,100. So other income now. Somebody is asking question, other income. Let me see the question. Somebody is saying, really? Okay, let me set this so that everybody will see what everybody is asking. Okay, so this transportation to this transportation this transportation is a downstream activity. We learned that in part one, that transportation of crude oil to the refinery is a downstream activity, refining activity and all that. Where upstream sector ends is when you take your crude oil and you take it to the terminal where it is ready to be exported. Your upstream sector activity ends. So, but this 38 million, if you remove three zeros, 38,000 is a downstream activity. So let's look at what we have here. 128,100. So open a bracket here. 128,100 minus taking this one now, 38,000 minus 38,000. Okay, then let's calculate. Let me leave this figure. I need it. 128,100 minus 38,000. That gives me 90,100. I'll come here. 90,100. Then the next thing here, related expenses. Okay, leave expenses. We are not done with income. The company entered into a natural gas contract with Tommy Limited. The value of the contract was 655 million, and the load factor of the gas was 54. So we'll come here, value of natural gas. Let's look at it from workings. Let's say workings 1. So let me do my workings from page 5. Okay, let me do it from page 4. So I can come here and say workings. 1. Value of natural gas. Contract value is how much? 655 million. 655 million. Is it load factor? Load factor is 54%. Load factor. Load factor. Load factor 54 degree. Gas factor, call it G. Okay, so we say 54 lies between 50 and 60. So it means that 60 minus 54 all over 60 minus 50 is equal to, let's see if that extract was given to us. It wasn't given to us. So sometimes you may need to remember those things. But in case you don't remember, it's not your fault. So find a way to remember this load factor and gas factor. We need to find a way to remember them. It was not given here. So let's go and pick them from our learning. So 60 is 15.5. 60 is 15.5. So this is 15.5 minus G. This is still 15.5 minus, sorry, what am I saying? Yeah, 60 is 15.5, yes. 50 is 16.9. 50 is 16.9. 16.9. All right, so we are cool. If you cross, okay, before we cross multiply, this should give us 6 over 10. So what will this one give us now? I will need this figure later. This is 15.5 minus 16.9. That gives us minus 1.4. So here is minus 1.4, and the top is just 15.5 minus G. All right, so we cross multiply, it becomes 6 multiplied by minus 1.4 is equal to 10 multiplied by 15.5 minus G. So let's clear this out. Minus 1.4 multiplied by 6 gives us minus 8.4. So this is minus 8.4. While this is 10 times 15.5 gives us 155 minus 10G. So if this 55 goes the other way, it's going to give me minus 8.4 minus 155 equals to minus 10G. So minus 8.4 minus 155 gives us minus 163.4, which is equals to minus 10G. Now, therefore, G is minus 163.4 divided by minus 10, which will give you 16.34%. So 16.34% is what you are going to use as your gas factor. So net value of gas contract will be, how much is it there? 655,000. So this is 655 million. Of course, you are supposed to remove 16.5. So I will say 1 minus 0.1634. This is like saying this 65 million is 100%. You are supposed to remove 16.34 as a discount. Now, this is a way of doing it so that you will not go and write 655, then you now do 16% of this, and you now put the figure down. You can do it that way. Okay, we'll do it the two way. So let's look at it here. Let's start here. Let's say this is 655 million, then minus 16.34% of 655 million. Let's do it that first way. Six five five. That will give me 107,027. So that would be like 107,027,000. It will be like 655 million minus this. So that would have given you, let me minus it straight from 655. So that would have given you 547,973. So this is what is your value of gas. Now doing it this way, you would have just done 655 multiplied by, let's say, 1 minus 0.1634. That will give you 0.8363. Is it 63 or 66? 8366. Now 8366 multiplied by 655, it gives you the same thing we have been doing here. It's the same thing. So you just do it this way. So I prefer it this way. When you get your gas factor, you convert it to decimal. That is your discount. When you remove it from 1, it is the remainder that is your net. So it is the net we are looking for, and the net is what we have used. So you use your net and we take it to where we need it. So 547,973. 547,973. Of course, there's a 3 zeros up, so that's why we leave it like this. So this is your value of natural gas. There is no other, so that means we've done this. There is no other income. Okay. All right. So we've done the income part. So all we now need to do is to add all of these together. So that is where I need this figure I had before, plus 653,700 plus 9,100 plus 547,973. And that gives us 4,315,053. So this is gross income. All right, so we will now remove less section 10 allowable expenses. Right? So whether you call it section 10 or you just say less allowable expenses, doesn't matter. So we'll be taking them one after the other. But first of all, we'll be looking at additional information to see anything. Depreciation of assets was included in production costs. So let's do production cost first and remove this depreciation of assets from it. So we'll go now, production cost. Production cost. How much is the production cost? Production cost here. Okay, so let me be lining them like this, the one I've used. So production cost is 749,980. 749,980. Okay, so we have done this. Then depreciation is included. Depreciation here is 120,250. 120,250. So now let's remove it. 749,980 minus 120,250. And that gives us 629,730. 629,730. So we've done with production costs. So it's better to start from your additional information and be adjusting, because if you have not done that and you went to write your production cost and do everything up here, you will not know that there is an adjustment. So the next thing to do here is, this is a schedule of qualifying capital expenditure. This is not the time for it. The unutilized portion of the capital allowance brought forward from last year, this is capital allowance, included in management and administrative expenses, was 3,500 naira paid on stamp duty for debentures issued and obtained by the company. Um, this is an expense that is capital in nature and is not allowable. So this 3,500, we will need to remove it. So we'll go to management and admin expense. That's the next thing we will do. Management and admin expense, 105,900. 105,900. So this is management and admin expense, 105,900 minus what we are going to remove here, 3,500. So we remove 3,500 from it. So let's see, 105,900 minus 3,500. That gives you 102,400. 102,400. Okay, so we've done that. Specific bad debt written off amounted to 39,500. Specific bad debt written off. Let's see whether there was even bad debt here. This is bad debt written off. You see, it was 89,500 that was here, right? And they said This is bad debt written off. But out of it, specific was how many? Specific is 39,500. So this is what we are going to use, 39,500. So specific bad debt written off, 39,500. 39,500. So we've done with this. Let's go to where bad debt is. And of course, we know that we've done with it. So if 39,500 was written off, it means 50 million was general. 50 was general. So it means this general is not allowable. Okay, so we go down. The amount on donation was expended wholly, exclusively, and necessarily for the company's petroleum operations. Normally, donations was not supposed to be allowable. But now you see here, the donations, let's see what is said about donations. There's no need to check because it's going to take us a long time to look for it. So normally donations is not supposed to be allowable, but here they use the REN word, wholly, exclusively, and necessarily expended for company's petroleum operation. So we can allow it. Although some people will tell you that do not allow it. But because this is wholly and reasonably used, just a moment, I don't want to go into conflict with what ICANN has provided. So let me even see their explanation if they actually remove it or not. Donations. Donations was even here. So they didn't, it's allowable. That's fine. So let's go here. So we'll pick it because it is mentioned that it is reasonably, that REN phrase was used here. So donations 25,000. We come here and use donations 25,000. Now the next thing, see the systematic way you are running down through your additional information. A sum of 12,250 paid to another company to retrieve information relating to the existence of petroleum company in the Middle Belt region was included in the miscellaneous expenses. So normally miscellaneous expenses is not supposed to be allowable. You need to specify them. But this figure 12,500,000 is to retrieve information and it's supposed to be allowable. If you look at it here, 12,500,000. I can't see it here. They say miscellaneous. Okay. Oh, it's even disallowable. I beg your pardon. I beg your pardon. It's correct. The sum paid to another company to retrieve information relating to the existence of petroleum is I remember when we are discussing part one, it was included among part of the disallowable. So we are going to disallow this. Now, even though the word miscellaneous is here, it's assumed here from this question that it is verifiable that it is part of petroleum activities. Normally, in practice, once you put miscellaneous expenses, you need to justify it, otherwise they'll remove it. So 57,560 miscellaneous expenses. 57,550, is it? 57,560. 57,560 minus 12,250 is that 12,250. So we have done this. So what is it going to be? 57, I need to write that in well. 57,560 minus 12,250. That gives me 45,310. 45,310. So I'll need to make this one look fine so that you won't get confused. Now, when we've done that, interest paid included 20,500, and this was paid to an associate company. The loan was obtained at market rate. So if the loan is obtained at market rate, it means that the interest here, this 20,250, is allowable, even though it is paid to an associate company. Now look at the loan here, interest 35,000 should be allowable. 35 allowable. Now, assuming that they said that this loan was not obtained at market rate or was not obtained at arm's length, you will need to deduct this 20,500,000. But because it was obtained at market rate, it qualifies it. So interest paid. So some of these things are just tricky here. Interest paid 35 million. Interest paid, just put it straight, 35,000. So what's the next one now? As a result of the need to meet up with the return deadline on payment of petroleum tax, the 13th installment became very urgent. That is not our problem now. So we have looked at expenditure. So we'll now come here to see which one we'll pick. Operations cost. We'll pick this. Operations cost 937.20. Operations cost 937.20. Am I correct? Yes. Done this. Intangible drilling costs 255,600. 255,600. Why is my 5 resembling 6? 255,600. This is tangible drilling costs. Then non-productive rent, 9270. This is non-productive rent. So you may need to know all these allowable and disallowable expenses. Royalty on sales, on export sales, 43,790. So this is royalty on export sales. Then the next one should be royalty on local sales, 10,800. Okay, the next one now, custom duty. Custom duty on plant. Custom duty is allowable, 39,100. Let's see. Custom duty is allowable. I just needed to be sure. Custom duty, 39,100. Then the next one is cost of drilling for appraisal wells. So come here, cost of drilling. Now instead of writing for appraisal well, I'll write two appraisal wells. So of course you know that the only allowable is two appraisal wells. So we have 104,400. So it's going to be 104,400 divided by 4 times 2. So it's just the cost of the first two appraisal well. 104,400 divided by 4 multiplied by 2. That gives me 52,200. All right, so the next one is transportation and traveling. Now, this transportation is not transportation of crude oil. This is normal traveling. Maybe you take a flight, normal transportation to do your official duties, 28,300. 28,300. So this is transportation and traveling. Okay. The next one now is salaries and wages. This is allowable, 395,200. So this is salary and wages. Done admin. Harbor duties, allowable. Harbor duties, allowable, 25,480. Harbor duties, All right. What was the next one? Pension fund contribution is an allowable expense. 52,500. Of course, it must be to an approved pension fund. Let's see if they accepted it here. Yes, it was accepted. We just have to assume it is to an approved pension fund. Then, if you look at it now, we've done all of these, all of these, all of these. Income tax provision, it's not allowable. It is the income tax you want to calculate. This provision was what was just entered into your account. This is what you provided. Assuming there was an increase or decrease in provision, it's a different thing. But this is provision. Even at that, even though there was an increase or decrease, it will still not be allowable. So we've calculated everything. If you look at this here, income tax was not included, the provision. So what do we do now? We look for the sum of all of these. It's quite a long one. Let's bring our calculator and do the maths. 629,700 plus 102,400 plus 39,500 plus 25,000 plus 45,310 plus 35,000 plus 930, 720 plus 255, 600 plus 92,070 plus 43,790. It's a long one. Plus 10,800 plus 39,100 plus 52,200 plus 28,300 plus 395,200 plus 25,480 plus 52,500. That gives us 2,802,670. Let's confirm if that's the appropriate figure. 2,802,670. Now this, don't just call it anything. Now you need to do tertiary education tax. It is never going to be spoken of, never going to be given to you. Now we are going to do workings 2 on that. So we'll go to workings 2. So in your exam, just devote 2 full pages for the full answer. Your workings should start from page 3. Or if you want to be on the safe side, you do 3 full pages. Your working starts from page 4. But in my own case, my working started as from page 4. I left 3 pages because my handwriting is big. Depend on you. So this is tertiary education tax, also called TET. So how do you get your TET? You will now say gross income. How much was our gross income that time? I think I have the figure on my calculator here. 547. No, that can't be my gross income. Let's check it out. I think, yes, that's it here. 4. So let's go where we write it down. So this is 4,315, 4,315,053. That's your gross income, less other allowable expenses. These other allowable expenses, we've calculated it before, so I don't need to be scrolling up and down. It's 28. Okay, let's just confirm. Yes, it's 2802,670. So when you less it, I need to do TET separate here. Okay, so if I less this from 4,315,053, I'm going to get 1,512,383. Okay, so that's this. Now my TET, so this is what I have here. So this is 102% of accessible profits. Therefore, TET is 2 over 102 times 1,512,383. That will give me the answer I need. So I'll just look for multiply by 2, divide by 102, and I'll approximate it to the nearest whole number, 29,655. 29,655. 29,655. So if you look at theirs, they are getting something different. I wonder what they got. 1528603. 15. Let's see what they did that. Okay, let's see their gross income. Maybe we must have missed something there. Their gross income is the same with ours. Now let's see how they calculate their What is the TET I just saw now? Sorry. Just a moment. I want to see what they did that we may be missing. What was it now? Where did they calculate their TET? For the last time, let me check again. They are getting something different. Let's see production cost. If what we did was the same as theirs, production cost was the same. Operation cost. Okay, it's the operation cost that may be different. Operation cost. So what did they do with the operation cost? 16,250. Where is that 16,250 coming from? 16,250. There was no 16,250 anywhere. Okay, related expenses. We missed this. Related expenses which amounted to 16,250 was included in operation cost. So transportation to crude oil to the refinery, related expenses, 16,250. I'm so sorry about that omission. It's good that we saw it now. 16,250. So it's 930, 720 minus 16,250. So the only difference we'll get here is difference of 16,250. So let's just do it again. 930, 720 minus 16,250. That gives me 914,470. 914,470. 914,470. Okay. So the difference here between this and this here is 2802,670. The difference is just 16. What's that figure again? 16,250. Is this 16,250? That's the difference. Okay, 16,250. So it's 2786, 2786, 420. 2786, 420. 2786, 420. We need to be very careful. 2786, 420. Go back to our workings. If in the exam hall you don't need to do all of this, it's not necessary. Just take your erroneous answer instead of finding where you got it wrong. 2786, 420. Time is going, but this is a class. You need to do it well. 2786, 420. So you need to remove this from 4315053. Becomes 1528633. 1528633. 1528633. 1528633. Then you find times 2 divided by 102. That will give you, I did something wrong. 1528633. What am I doing now? 1528633 multiplied by 2 divided by 102. I went to do 100. 29973. 29973. So 29973. Think this aligns with theirs. 29973. So we are on course. 29973. We'll now take it down here. 29973. So when we do that, we will now add these together. So this is 29973 plus 2786 420. That will give you 2816 2816939. 2816. So this is your allowable expenses. Okay, the question asked you to look for accessible profits, not allowable expenses. So we've done allowable expenses. So what do we need to do? This allowable expenses is supposed to be taken to this side. So I'll clean it up here. Let me write it well here. Need to clean it up here. 29973. Let me write it well here. 29973. Then the thing we got here is 2816393. So we are going to be minusing it from, so this is it here. Assuming I've copied this, let me go to the other calculator that has my gross profit. My gross profit happens to be this. So I'll just simply say minus, paste it, and I have 14 1498. 1498 6 what? 1498 660. 1498 660 happen to be the gross accessible for, they say it's 630. What did I do? I won't be bothered by minor differences. So 2816 420. Let me see the difference. The difference 2816 428 423. Sorry. I need to know the difference between theirs. 2816 423 minus what I had in my own, minus 2816 393. The difference is 30. Where is that 30 coming from? Let's investigate this 30 here. What do they have here in their production costs? What's their production costs? It's 30. Admin expenses. Well, I will not be bothered by 30 naira, with 30,000. So this is what I have here as my allowable expenses. No, as my accessible profit. So your accessible profit is your A part. Your A is accessible profit. You've gotten that. Now, after getting your accessible profit, the next thing to do is to look out for, you're asked to check your chargeable profit. Your chargeable profit is after your accessible profit, you check if there's any loss from last year. If there is no loss, you now deal with capital allowance. So here, unutilized portion of capital allowance, okay. So there is no loss. So you will now deal with capital allowance. So you will say less capital allowance. Capital allowance is workings number 3. So let's go to workings number 3 and deal with capital allowance. So workings number 3, capital allowance. So capital allowance brought forward. From the question, we are told unutilized portion of capital allowances brought forward from last year was agreed to be 33,700. 33,700. Right? We're also told that why capital allowance agreed for this year is 88,500. So that's annual allowance 88,500. Let me write it. 88,500 annual allowance. Okay. So They spared you certain things. They didn't give you assets, the date the asset was acquired, and so that you now start checking if you need to calculate 20% or 19%. They spared you that. For annual allowance, normally if they give you list of assets, you need to, I did something for you the last time where you bring the reporting year, which is 2018, and you just minus 4. So 2018 minus 4, 2014. So 2014's asset, 2015, 2016, 2017, 2018. So 2014 assets will be charged 19%. And any asset bought before 2014 will not be charged on annual allowance, and the rest will be charged 20%. They have done all that for you. That's why they gave you capital allowances agreed for the year is 88,500. They have done that for you. Okay. Now the next thing that is remaining is the petroleum investment allowance, PIA. Petroleum investment allowance. Now, there's something I forgot to tell you at the beginning of this question. From the reading of this question, we didn't see anything relating to PSC, relating to production sharing contracts or deep offshore inland basin and all that. So all along, this is a joint venture question. That's one of the first things you should have noted. So your petroleum investment allowance, how do you get that? You look at all the assets bought in 2018 and you check their location. So you go and calculate PIA now. So this should be workings 4. You go and calculate your PIA. Oh, we are in workings 3 and we are calculating workings 4 to do workings 3. It's fine. We'll calculate workings 4 to do workings 3. Then we'll check if there is any balancing allowance. There is no balancing allowance. That's fine. So when we add the PIA, we are going to calculate. When we add it to this, we are going to get our capital allowance here. Capital allowance. So we are going to check this. Now we'll now check or 85% of accessible profit. So that will give you 0.85 multiplied by your accessible profit. Your accessible profit here, 1498660. 1498660. 1498660. Then we'll now say less 170% of PIA. So that would be like 1.7 times whatever we calculate as our PIA. Anything we get, we'll less it from what we have here. Then this will be your capital allowance restriction. Then you now say capital allowance. So the capital allowance that we'll be choosing is the higher, no, the lower. The lower. All right, so let's look at this 85% here. So we have 0.85 multiplied by 1,498,660. That give you 1273, 1273,861. Okay, so we need to go and check our PIA. So come here, workings for petroleum investment allowance. So we have assets, costs, location, rates, amount. So we have how many assets here? The first one is storage tank. Storage tank. The next one is plant and equipment. Plant and equipment. So take them one after the other because it's just two, irrespective of when they were bought. They were bought on 2018. This is onshore. Okay, the cost first is 23,500. So this is 23,500. The other one here is 75,000. 75,000. Location, this is onshore and 30 meters depth. Onshore, 30 meters depth. Onshore, 30 meters depth. Onshore rate is 5%. Onshore means land. Now, if it is between offshore 0 to 100 is 10, then between 100 to 200 is 15. Above 200 is 20%. So we've gotten the percentage now. Need to remember that for you to know what to do here. So we have here 23,500 times 0.05. That gives us 1175. 1175. Then we have here 75,000 times 0.15. 11,250. 11,250. So 11,250 plus 1175, 12,425. So that's your PIA. So your PIA is 12,425. So you come here, 12,425. Then you come here, 12,425. So whichever one we can do now, let's do what we have here, 12,425. Let me multiply this by 1.7. So that is 21,123. 21,123. Okay, 21,123. If I minus it from 1,273,861, I have 1,252,738. So this is the maximum. This is the maximum capital allowance you can charge. Is the maximum you can charge. So let's look at this. 33,700 plus 88,500 plus 12,425. That gives you 134,625. Of course, this is smaller than this. 134,625 will be the capital allowance. 134,625 will be your capital allowance. So you take it up here. What's that figure again? 134,625. Okay. So now, when you less your capital allowance from it, from your assessable profit, let's less it. So this minus 1,498,660. That gives me 1,511,085. So this is your B part of your question. Chargeable. Chargeable profits. So this is your assessable profit. This is your chargeable profit. Okay. Now, the next thing to do, you are asked to look for chargeable tax. Chargeable tax. So C, chargeable tax is 85% of your chargeable profit, which is 85% of 1,511,085. So let's look at that. Multiply by 0.85, and that gives you 1,284,422. 1,284,422. That's your chargeable tax. Then the D part of your question, what is it asking you? Total tax payable. Of course, you're going to be paying. If you look at your provision, you are providing 166,100, right? 166,100. Meanwhile, your tax is one. Let's even see. You provided. What am I doing? I'm looking at answer or what? Okay, there's no MOU, so there's nothing to the chargeable tax. Chargeable tax is let me see what they got here. Chargeable profit is slightly different from mine because of the slight difference. Capital allowance is okay. I don't agree with their capital allowance. They didn't bring that of the previous year. So that's why I'm having a okay, they brought it. Okay, yeah. So their capital allowance is 21,123. That's what we did. Okay, restricted to this PIO, yes. 134,625, yes. Chargeable profit, they have 1,364. We got a different thing. So, but that's not a problem. I don't understand what they did their own. That doesn't mean mine is not correct. Now your chargeable tax is this. Your total tax payable. Your total tax payable. You're going to be paying PPT, which is your chargeable tax, which is 1,284,422. You're also going to be paying your tertiary education tax. The tertiary education tax which you calculated, though it is allowable, you will still pay it 29,973. 29,973. Then you will now do other taxes. I will now say downstream. So this should be workings number 5. Workings number 5. Workings number 5. Tax payable for downstream operations. We'll now go back to the question and we'll see those things we call downstream. Income from downstream. You remember we removed it before. So income from downstream. How much was it here? 38,000. So this is 38,000. Then related expenses 16,250 less related expenses 16,250. So the rest, so now we have used this and we have used this. The rest are I've used them, which doesn't require to be used here again. So we simply find the profit from here. So this is 38,000 minus 16,250. That gives me 21,750. 21,750. So this 21,750 is both your accessible stroke chargeable tax. in chargeable profits. Therefore, chargeable tax, that should be 30% of 21,750. So this is what we use as 30%. So you multiply by 0.3, that gives you 6,525. 6,525. So if you look at it here, it is this. I don't understand how they got 6,960. Okay, tertiary education tax in it. Tertiary education tax. So this is CIT. Then TET will be 2/100 times, let me just say 2%, so that you will not think I was supposed to do 2/102. So this is 2% of 21,750. So 2% is how much? 2/100 times 20 times 21,750. So that's 435. 435. So if you add them together, total other taxes should be 6,525 plus 435. So I'll add plus 6,525. That gives you 4,966, 6,960. 6,960. All right, so that's it. 6,960. So you now take it down here. So this is 6,960. Then you add everything together. So we have 6,960 plus 29,973 plus 1,284,422. And that gives me 1,321,355. 1,321,355. That's your total tax payable. So let's see, it's slightly different from theirs because of slight differences in calculation. But the thing is here that in principle, we've done everything that needs to be done. We've done everything that needs to be done. So this is a very comprehensive question on petroleum profit tax. So this was deliberately taken so that we spend some time in doing this question number one. So question number one here, call it A20, it should be A24, done. Is it A24? Let me see, check. Okay, so let's call it A24. This is our topic 24. So this is done. Okay, so we'll do one more, but something that will not become too much. Let's look at this question 7, May 2017, question 7. May 2017, Question 7. May 2017, question number 7. May 2017, question number 7. Let's see how easy it is to be done with this time. Okay, so this is not a calculation. This is not a calculation. So it is assumed that this has been done. Let's assume that this has been done. A24. Let's assume it has been done. Let's get to November 2016, question 7, question 6. November 2016. November 2016, question 6. November 2016, question 6. All right, so this is a short one, question 6B. We're not going to be explaining associated gas. You know that from your lectures. Downstream activities, you also know that. Now let's just do this one here. This is 11 marks. It's not as cumbersome, as the one we just did. That one we just did was a very comprehensive question, very comprehensive. So let's take this one as the last question for today. This is a ICANN past question, November 2016, question 6. All right. So what does it say? This company is Bivenet Petroleum. Bivenet Petroleum. Is that the name of the company? Limited. Of course, you have to be a limited company to be able to do upstream operations. Take my whiteboard here. Then they have been in the oil business, prospecting business for some years. Now, this is financial statement from December 31, 2013. So I will just say accessible, chargeable, and other taxes for 2013 year of assessment. So this is tax for year of assessment 2013. Okay, so let's start operations. Now, value of exported oil. So they have already done the posted price and all other things. They have already done the posted price. So this is 1030. There's a 3 zeros up. 10, need to see what was there. 10, 30,000. So this is value of oil exported. And this is domestic sales, 842,000. 842,000. This is domestic sales. So we've taken this, then chargeable gas sales, 603,000. 603,000. This is chargeable gas sales. Now you see here, you're not even doing workings in this. Now we have other income. Is there anything on other income here? Interest paid, no. Capital allowance, including operating costs. Okay. Company is entitled to investment allowance. Okay, so other income is also allowed. 425. 425. So this is other income. So because this was not in question number one, it is as cheap as anything. It didn't make it as tough as question number one question. So this is 1030,000 plus 842,000 plus 603,000 plus 425,000, and that gives me 2,900,000. 2,900,000. So this is your gross income, because this is your gross income. So you will now less allowable expenses. Now, if you like, you call it section 10 allowable expenses, but I just want to use allowable expenses. So interest paid included 12 million paid to an affiliate company. They didn't tell us when. They didn't tell us when. So affiliate company is an associated company, and it's possible that it is not at arm's length. So this interest paid, we will need to remove this 12,000 here from 98. Interest paid 98,000 minus 12. That would be like, should have made this thing smaller. 98 minus 12. That would be like 86. 86. So we are done with interest paid. Capital allowance later. Included in operating costs is 302,000 paid to a company for information on oil prospects in Adamawa State. Of course, this is not allowed. 302,000 operating costs. Operating costs. Take this. So our operating cost, operating costs. What was given to us here? 1385,000 minus 302,000. So let's find out how much. 1,385,000 minus 302,000. That gives me 1,083,000. That's 1,083,000. That's fine. The next one will be, so that means we've done interest, done with this. Company is entitled to investment allowance. We'll do that later. So we'll come down here. Intangible costs allowed 142,800. 142,800. That's intangible costs. Royalty on export sales 125,000. The next one is royalty on local sales 96,500. What's the next one? Non-productive rent 102,000. Next expense, exploration incentives 313,500. Exploration incentive 313,500. Then we have our rental 101,200. Administrative expenses 265,000. Now let's check. We've done everything. We've taken this, we've taken this, we've taken this, we've taken this. So everything in the body of the question here, we've taken them. Not taking capital allowance, we're not taking PIA yet. Of course, this is a joint venture business. So you will never be given tertiary education tax. So it's your job to calculate tertiary education tax. So that's the next thing we want to do now. Don't forget that. If you do anything, don't forget tertiary education tax is allowable. So we are adding up all of these. All right, at this point, our total allowable expenses is 2,315,000. course, we will now need to put our tertiary education tax. Tertiary education tax. Of course, when you do workings 1, I will go to the next page to do your workings. Workings 1, tertiary education tax. So we have our gross income. What do we have there? 2,900,000. Other allowable expenses, 223,15,000. So let's look for that will give me 585,000. Therefore, TET is 2/102 times 585,000. So times 2 divided by 102. That gives me 11,471. So that's what will take 11,471. 11,471. You add them together. So this 11,471 plus 2,315,000. You have 2,326,471. Let's see if I capture it well. 2,326. 2,326,471. Of course, I'm going to put it in brackets. So this is your total allowable expenses, which is this. So when you less it from your gross profit, 573, 573, 529. So this is your accessible profits. Of course, you have to less your capital allowance. This is in workings 2. So you go to workings 2 here. Capital allowance. So what were we told about capital allowance here? Capital allowance agreed was this figure. Petroleum investment allowance. So annual allowance. how much was agreed? We have 253,750. 253,750. Petroleum investment allowance, how much was agreed? 173,000. Add them together. 253,750 plus 173,000. That gives me 426,750. So this is your capital allowance, restricted to restricted to 85% of accessible profit. So I will do 0.85 multiplied by 573 529 573 529 573 529 times 0.85. That will give me 487,500. 487,500 less 170% of PIA, which is 1.7 times 173,000. Okay, 1.7 times 173,000. That gives me 294,100. 294,100. So that's what you will do. 294,100. You less it from 487,500. That will give me 193,400. 193,400. So I will choose the lower. Choose the lower. 193,400. You know, in the previous example, this capital allowance was the lowest of the two, but now in this example, this is the lower one. So 193,400, 190, 193,400, plus a low, lessen it, 193,400, less it from 573,529. You have 380,129. 380,129. All right, so this happens to be now your chargeable profit. Chargeable profit. Okay, so your petroleum profit tax at 85% of chargeable profits, because we are told that the petroleum profit tax rate is 85%. So that would be
0.85 multiplied by 380,129. So you multiply this by 0.85. That will give me 323,110. 323,110. So this is your PPT. Then your tertiary education tax, you've calculated it before, 11,471. So you can add them together to know your total tax payable. Okay, plus 11,471. That will give you 334,581. So with that, you have answered the question. They told you to find chargeable tax and not total tax. So your answer should even as well have ended here. But if you bring this one down and put it, there's no problem. You still get your marks. So what we have just done now is we have solved this question A24 done. So in our next class, we've done the question number one question here. So the elephant in the room is gone. We are going to be taking two question number two question and perhaps one question number three question. So I can as well come here and say this is for A25. Let me call this one A. Let me change the color of the pen so that we can remember. Let me use the yellow. A25. A25. That's for the next class. A25. 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 So you see how many PPT questions we are doing. A25 and A25. So it's not everything we are going to solve. We are going to solve as much as will make you confident to go to solve the exam questions. So you pass your exam on the strength of how much you can solve your PPT question. So how much you can solve a PPT question, how much you can solve your CGT questions, and how much you can solve your other taxes like capital allowance and all that will make you pass your exams. So that's where we come to the end of our class today. It has been an insightful one where we were able to solve two past questions, or shall I say three past questions, because we've looked at some that are not calculation, taking them as solve actually two past questions on calculation. So all taxation, all petroleum profits tax questions are similar in a way. You will see similar things that will make you attempt it and get most of the marks. So it's just for us to come and prepare and practice more for us to be able to know how to solve and be proficient in that aspect. So thank you for the time for the class, and I will see you in the next class when we shall be practicing more and boosting our confidence. Thank you.